afternoon. Happy Friday. This is Sean LaBelle of the Decker Hewitt Group. It was a negative week here amidst a bit of a pickup in volatility. We've kind of been discussing this in recent weeks that investors should expect just a bit of a consolidation period in the market. Once again, it's only natural to see this sort of trading pattern when the markets are up around 10 to 12% in just a 3-4 month period. In terms of news this week, it was that potential Biden tax rehaul south of the border that had investors kind of run for the doors a little bit on Thursday. Initial wires suggested that the capital appreciation tax might double, or rather more than double, upwards of 43%. That's just an initial number, obviously a negotiating tactic that isn't largely to be realistically expected. We discussed that a little bit in this week's Market Watch Weekly. That number will go up. It's currently at 20%. It's just a matter of how high. Wall Street firms are expecting probably a 28% number in terms of that capital appreciation tax. Implications obviously are going to be a little bit different for long-term investors south of the border. We'll see how that kind of plays out, but you might see these sort of high growth names of the past be under a little bit of pressure here as that chatter sort of unfolds. In terms of Canada, we had the big budget this week, first time in 2 years. So this week's Market Watch Weekly just runs through some of the key points that investors should probably focus on. It is a long report. If anyone wants a copy of that, it's more than 100 pages. We definitely have versions of it that you guys can read, but we've just clipped 10 to 15 points that we think that investors should probably pay attention to. And then that'll do it for this week's Market Watch Weekly. Hope everyone enjoys the weekend, and we will talk to you next week. Cheers.